Hey, this is Chris, and in this video I'm going to be reviewing some of Australia's more popular dividend-focused ETFs listed on the stock market. I'm not going to be looking at some of the active ETFs or some of the global dividend ETFs. In this video I'm going to be focused on the Australian share-focused dividend ETFs, and those ones are the iShares S&P ASX High Dividend Yield ETF, the Russell High Dividend ETF, the SPDR MSCI Australian Select High Dividend Fund, the Vanguard Australian Shares High Yield Fund, the ETF Securities S&P 300 High Yield Fund, and the VanEck Morningstar Australian Moat Income ETF. It is a mouthful, but we'll get through them all, and I'm going to be reviewing them across a range of different features: their size, their diversification, their performance, their slippage, and their liquidity. So first of all, on size. Now, of all of the dividend-focused ETFs on the stock market in Australia, there's one that stands out as by far the largest at the moment, and that's the Vanguard Australian High Yield ETF. It has about 1.8 billion under management, and the next largest on the stock market at the moment only has about 300 million. So the Vanguard ETF is the standout when it comes to size, and size is important because funds that don't get to a critical mass fall at risk of getting delisted or pulled off the market. So it's always good to put your money into bigger ETFs if possible. So the next factor is diversification. Now, what you find generally with high dividend ETFs is that they don't have a lot of diversification. They're generally quite focused on a small number of stocks, and so we prefer ones that are at least diversified across more shares rather than less. The ETF with the least diversification is the Morningstar VanEck High Moat ETF. It only has 25 different high dividend shares. And the one with the highest diversification is the Vanguard High Yield ETF that has 64 different shares. So again, from our perspective, the Vanguard fund wins out when it comes to diversification. Then there's performance. Now, the performance of these high dividend ETFs does vary quite a lot, usually due to the underlying sectors that have higher or smaller allocations. And so what we've seen over the last 5 years is actually the Russell ETF has outperformed, largely because its financial component is bigger than other sectors, whereas others have more mining shares or other sectors that haven't performed as well. And the second best performer over 5 years is the Vanguard High Dividend Yield ETF that has returned 10.2% per year. So Russell comes out on top, Vanguard second, and the rest are a little behind. However, over 1 year, the Vanguard fund has actually outperformed, returning a massive 34%. And that's really off the back of the Australian market's strong performance over the last year. So the next factor I'm going to be talking about is slippage. So slippage basically refers to how much money you lose by crossing across from the buy to the sell when you're buying shares or ETFs on the market. You want the slippage to be as low as possible, which means you're losing out less when you buy an ETF. And when it comes to slippage, the ETF with the lowest slippage in this category is the Vanguard High Dividend Yield ETF. It has slippage of 0.07 or 0.07%, whereas all of the others have somewhere between 10 and 20 basis points of slippage. So again, the Vanguard Dividend ETF wins out here. And then there's finally liquidity. So liquidity is important because you want to be able to get in and out of ETFs, with as least impact as possible, but also not relying on market makers if possible. And when it comes to liquidity, once again, the Vanguard High Dividend ETF wins out. Over the last month, it's had $4.5 million a day of turnover, whereas the others all have under $1 million a day of turnover. So overall, I think it's pretty clear in this category, for us at least, that the Vanguard High Dividend Yield ETF is the standout. It's certainly the one that we've been recommending to clients as part of the Stockspot Themes selection. If people want a high dividend ETF that has Australian shares with higher dividend yields than the overall market, then there are also global dividend ETFs you can look at, or active dividend ETFs. Unfortunately, though, a large majority of the active dividend ETFs underperform the Vanguard one, which is not why we don't offer them to clients and don't recommend them. And if you want a more detailed analysis of these high dividend ETFs, you can have a look in the link below in the comment section, where we have our larger analysis on all of the high dividend ETFs. And if you've enjoyed this video, feel free to subscribe and like the channel. Thank you.